Check the mic and make sure it sound right.
In my most recent video, I promised that I would cover this article here in the next video. So let me get that promise addressed. And it's here. This article is from the 8th. Today's the 10th of August, Sunday. And it said that XRP price jumps on 200% futures volume surge as Ripple lawsuit ends. And we know the lawsuit, I did a video on how it was a bit of another head fake, really, folks. That's the best way to say it. It's a head fake. This article says that XRP prices may continue to climb toward 450 over the next few months as it breaks out of a classic bullish continuation pattern. Without being too technical, it does say that XRP futures volumes have popped by over 200% in the last 24 hours. The bull flag targets 450 by September or October. And let me pause. I'm not a reader. Let's talk about it. Whenever they start throwing numbers at you, take my word for it. It's a head game. At the time of the writing, XRP was trading at $3.18. We'll look here in a moment to see what it's actually trading at now before we go into Monday. But you can see this chart here that shows XRP up here, number 3, probably ranking them by market cap. But nonetheless, when it comes to volume on futures, 208%. And that's actually what this article here brought out. So I thought, what does that mean to us as regular folk trying to make money in this volatile market? Because here's what happened to crypto while you were sleeping. The institutions got their hands on it, and now they're making it fit into the rules of the financial markets that already existed. They're trying to control the front running that we did on these assets from the beginning. Crypto has been popular for ridiculously high returns on investments driven by primarily speculation. XRP no longer really needs to be driven by speculation, and if it were not being compressed and suppressed, it would be far more expensive than what it is right now. But it goes on here to say, rising future volume often reflects heightened trader interest and speculative positioning, especially after major news. Open interest, which shows the value of unsettled futures contracts, also climbed 15% to about $5 billion of liquidity waiting for them to go and try to get a hold of. Down here it reads, heavy long positioning can increase the downside risk. And that's what I think you need to be afraid of. That suggested over-leveraged traders could face liquidations, potentially accelerating a correction if the price turned lower from current levels. XRP's cost basis distribution data shows that the $280 to $282 range holds the largest cluster of supply, with over 1.7 billion tokens acquired at those prices. Like I mentioned earlier, at the time of writing that article, it was trading at $3.18. And we can see it's still trading at $3.18. And that reference to the heavy buying zone is this red line right here. I put it right in between 280 and 282 at 281. And we see it took a dip down there and then it came back up. But we can also see that there's a trend line that formed on the way up here. It hasn't come down to meet it yet. So if it did come down to 316, it wouldn't be a surprise and bounce off of there. But what's very possible to happen, because there's so much liquidation for them to get after $5 billion worth down here, it could do something weird and go down there and grab that liquidation. Because you can see what they did here, right? This is when the news came out. This was leading up to it, the long candle, and then this short candle here was the day of the news. Remember? Buy on rumor, sell on news. But what I'm going at, after the news on that little green candle there, look at the volume. But if you line that volume up, you can see it's red there. Look at all that buy volume, and then it's red there. So all of this green buy volume suffered a loss until now and still suffering a loss. Most people can't handle that. And so the next move I expect for XRP, absent a complete explosion to the moon, or at least to orbit, is they're going to go down there and get those longs. And so I thought I'd do a brief explanation of what those futures contracts mean, what those derivatives are, so that the average investor can understand why the fact that the futures went up 200% in volume may not be good news for the price of XRP, especially on good news where it was probably a lot of long contracts. Let's look into futures trading briefly. I'll try to do my best to explain what futures trading is and how we can take advantage of the fact that people do futures trade, whether we futures trade or not. Preferably not. But futures are an agreement to buy or sell an asset at a set price on a set date in the future. The underlying asset can be a commodity, a security, or a financial instrument. Futures trading requires the buyer to purchase or the seller to sell the underlying asset at the set price, regardless of the market price at the expiration date. Now, that's pretty simple. In other words, I promise to buy from you 5,000 XRP at $3.18 on October 10th, 2 months from now. So no matter what the price is of XRP on October 10th, 2 months from now, I have to fulfill that contract. I have to buy XRP, 5,000 of them at $3.18 on October 10th. Now, if I already own the XRP, I'm covered. I have a covered long contract. But if I don't have the XRP, it's naked. And I'm going to have to go out into the open market to get it and pay whatever price it is. So what that means is if the price goes up, say to the 450 we talked about earlier, I get to buy it at $3.18. So everything above $3.18 to the $4.50 minus fees is my profit. And since I normally couldn't buy 5,000 XRP on my own, and I did a 10x because I could only afford to buy 500 on my own, I've made one healthy profit by making that call. Because for my $500, I end up with $5,000 times the $1.32 difference from 318 to 450. Now, of course, the contract could go the other way. And instead of it going up, it goes down to say that $2.80 where they're going to go get that liquidation. How do they get the liquidation? Well, now I have a contract where I have to buy it at 318 and it's only $2.82. So I'm $36. Man, I'm stumbling here in the hole. And my contract was for 5,000 units. So 5,000 units times the 36 cents is $1,800. And I put 500 in it. So what do you think I'm going to do? Go find $1,300 more dollars? Or go in default on the contract and let them keep my $500? I'd say B. But guess what? You lost 100% of your money. And that's called liquidation. Now, if you thought the price was going to go down, you could do the exact opposite. That's a long contract. You could also do a short contract and say, I'm going to sell 5,000 units on October 10th at $3.18. Why? Because you expect the price to go down. You expect the price to go down to that $2.82. And so your 5,000 units times your 36 cents, now you're making a profit, right? You're making a profit of the difference between the $3.18 and the $2.82, which, as we've already calculated, is 36 cents or $1,800. So you made $1,800 off of your $500. But what happens if it shoots up to the 450? Nobody's gonna buy it from you at $3.18, right? So now you're gonna lose all your money, or you're gonna rush to cover. And if you rush to cover, you're gonna push the price up more and just keep burning yourself. It's just too dangerous of a game to play for the beginner. So, what isn't risky for a beginner? A gorilla grip. With every style of investing, there's pros and cons. But with a gorilla grip, you can't lose 100% of your money unless what you're invested in totally fails. And guess what's not going to totally fail? XRP and many other coins like it. But you can see it says higher risk because of the leverage. You don't want to do that. The good thing about a gorilla grip is when the price goes up, you're smiling and happy. And when the price goes down, if you're a savvy investor, the best thing to do is just buy the dips. But when you know situations like this are going to occur, you can make plans on whether you believe it's going to be an opportunity to buy or an opportunity to sell, because the markets are definitely going to go after that liquidity. And my guess is the price is going to go down. Oh, it will fake you out and look like it's going to go up. But there's going to be either a wick or a candle that goes down and grabs all that leverage. I'm DK Will. This is DK Will Talk About It, and I have talked about it. Have a wonderful day.
Check the mic and make sure it sound right.